Well, thank you for watching this video. This tutorial video is brought to you by newqbo.com. newqbo.com, your one-stop QuickBooks online learn and share blog. Our blog is rated among the top 10 sites for QBO resources by actual users. We try very hard to keep our contents up to date. That's not easy since QBO is coming out with new improvements all the time. We also offer paid consulting services. So all you have to do is from our website, just click this consulting and select your date and register. And you can also sign up QuickBooks for a 30-day free trial from here. We have external banner links in here. So if you want to sign up from QuickBooks USA, here is your banner link. QuickBooks Canada, QuickBooks UK, QuickBooks Australia. So in this video, we're gonna focus on deposits, everything you need to know about deposits. That's bank deposits, customer deposits, or vendor deposits. So I'm on QuickBooks Online here. The first thing I did here is to set up the vendor current assets and current liabilities. As you can see here, so bank account, basically you have bank deposits. Most of us are pretty familiar with bank deposits, and we'll go into outstanding deposits in transit. And the customer side, they have a prepayment, they make a down payment, or just give you half payment, and then rest you invoice it. And the other one is you set up as current liability. You want money up front before you can do the job, and job will take, let's say, 12 months. The other type is job will take more than 12 months, but you want upfront money from your clients. So you'll need to set up as long-term liability because you haven't provided services, you have earned revenue yet. And the other one is the vendor type, the current asset. You sign a lease, let's say for 12 months, and it's a refundable deposit, and you want to set up as current asset on a balance sheet. And same thing with long-term asset. If you sign a long-term lease, let's say for 2 years, and you set up as long-term asset, also refundable deposit type. Okay, so I'm on QuickBooks Online in here. And I did set up a couple of new accounts in here. Let's look at the first one. Here is a deposit one here. Deposit one. So this is for the short term. This is a rent deposit. Refundable rent deposit is basically category is current assets type. And then in here, you just select the other current assets. And it's a rent deposit. It's a short term one, refundable within 12 months. And then I have a deposit 2, that's a long-term asset right here. So other assets and a long-term asset, deposit 2. You will get this money back. Let's say after 24 months you sign 2 years lease. And the third one I have the deposit 3 and deposit 4 in here. So deposit 3 is basically you asking your clients, hey, I'm going to do this job, but I want money up front, and it's going to take you about a year or so to finish this job. So the client gave you money up front, you don't want to take that to revenue yet, so you set up a current liabilities. And the fourth one is the long-term liability. Customer gave you money up front, and the job's going to take more than 12 months. So those 4 accounts. And then if you want to create a sales receipt or invoice, you need item type for those upfront deposits you get money from your clients. So product and services, I have deposit 3 and deposit 4. The service type, deposit, and this account is mapped to deposit 3 and it's the current liabilities type. And deposit 4, same thing, but this one is mapped to long-term liabilities side. So now we have account setup, item setup. Okay, so let's start with the first one, invoice, and this is like a you sold something and the customer gave you half deposit, prepayment, and half balance. You'll get the money later. Let's say the customer is Bobby Smith and bought something. Let's say materials. Say $2,000, let's say, and give you 1,000 deposit upfront prepayment. And let's say this is payment is check type. A reference number is, let's say, 1,000. That's the check number, and the date is, let's say, invoice date is 10/30, and the balance due on in this invoice is 11/60. So save and close. So that's the first one. So it's basically prepayment type. And the second one I'm gonna do is you sign a lease, and your landlord wants some rent deposit. Let's say in this case your landlord is Tom Case, and the deposit one is deposit 1 is your current asset. Deposit 2 is your long-term asset in here. All right, so this is the short term. Let's say you sign 1-year lease. Another one, let's say 2-year lease. And amount is, let's say, 1,000, and let's say the other one is 2,000. And let's say there's different locations. You know, for this example, Los Angeles, let's say this is location, and okay, so that's it on this one. And let's say the bank account is Chase checking. Okay, and let's say, you know, this is your $3,000 check. Check number is right here. Save and close. So that's the vendor part. And let's say now you're gonna invoice your client, and we want upfront money for some project. Let's say Everest Construction, and it's a deposit 3 and deposit 4, and this is, you're going to finish it in let's say the project A. Let's say this is going to take about 1 year to finish it, and let's say another project B, that's going to take, let's say, 2 years. Okay, project B. Okay, and let's say this one is 5,000, and the other one is, let's say, 10,000. Let's just save it. Okay, and let's say you also receive the payment same day. You can create sales receipt. And this one we're going to deposit Chase checking. Save and close. Okay. So now Okay, so now if you go to bank account, chase checking, so you have 12,500. If you look at the registered in here, okay, so in here 12,500, and let's say you want to reconcile it end of this month, end of October, and let's say the bank statement is showing 11,500. Okay, so $1,000 check. Let's say this one, uh, it's still deposited in transit. You deposited on 10/30, but when you got the statement, it wasn't there. But you already recorded in QuickBooks. So this is what it is: outstanding checks or deposit in transit. So that's a deposit in transit in here. So at this point, there's nothing wrong with your QuickBooks. The bank just hasn't deposited or shown in your account yet. So you can just reconcile it. So that's the outstanding deposit we're talking about. Okay, so now let's go to register again. Now we'll look at the deposit one in here. As you can see here, $1,000 in here as a current asset. So this is the rent deposit for signing 1-year lease. And there's another one, deposit 2, is you're signing your 2-year lease. And then I'm sorry, the 1,000 deposit one. This is the one asset one. 1,000 is the you pay to landlord, and 2,000 you pay to uh, signing a long-term lease. And then you have a deposit 3 in here, current liabilities 5,000. This is from your customer client, and deposit 4 is uh, also from your client for long-term liability setup, and you haven't done the job yet. So if you click this one, you will see $5,000 balance left, and this was done. Invoice was created on 10/30, let's say, and so let's say next year, 10,000, 2016, you got the you finished the job, and you want to recognize this money as your income. So all you have to do now at that point is, go to invoice and select your customer right here. And now you want to select your product. Let's say your sales, and this is for 5,000. And in here it's 2016. Let's say that's when you finish the job, and then you want to have a deposit 3 in here, and just the negative amount, just reverse. So you want to clear that account, so the invoice amount is 0. So this is when this will recognize uh, as income, and this will take it out from that current liability account. Save and close. Okay, as you can see here, the balance is 0. At this point you can just reconcile it. Let's say end of 2016, and October, say, let's say this is balance 0. As you can see here, the first one is the your invoice deposit, and then you created invoice to clear that account. So you have to select these two, and difference is 0. See right here, as you can see here, is reconciled these two. So the other one, you'll have to do the same thing for the 10,000 for the uh, $10,000 when you know you're ready to invoice your client and recognize revenue. So you do the same thing like we did here. Deposit 3, deposit 4 at this point is still outstanding. And now let's go back to the deposit 1, and this is rent deposit. And so let's say you got this money back uh, next year in 2016. All you have to do is bank deposit and receive from right here, vendor, and the account you want to select is deposit 1, deposit 1. All right, let's say date is this one, and amount is $1,000. So this is the deposit 1, and you can put the check number like this. Save and close. Okay, so deposit 1, opening balance, the QuickBooks balance is 0 now, and if you want, you can click this one. As you can see here, these two are not reconciled yet. So to keep this account current, up to date, you can reconcile it in let's say October 2016 here. 2016, and end of October, balance is 0. Difference is 0, in and out. Finish now. Okay, so deposit 1, as you can see here, it's all reconciled, just like your bank accounts. So, you also need to reconcile, right, deposit 1. So they all have in chart of accounts, you go back to chart of accounts, you all have accounts that you can reconcile it, to keep this account accurate. So you need to reconcile it like this. So that's how you have to handle it, all the deposits 1. Okay, so we went through all these, outstanding deposit, prepayment, current liability, long-term liability, current asset, long-term asset. We all went through that one. Well, subscribe to our YouTube channels. We have 2 channels, New QBO, VP Controller. Like us on Facebook, and bookmark our website. It's newqbo.com. Thank you for watching. Bye.